My name is Steve Schwartz. I'm with RiosQuant, and this is our webinar on November 26th, and it is Gaining Your Trading Independence. Before we get started, it's important that you read this disclosure. I'll just paraphrase and let you know that the purpose of this RQ EDU workshop, the trading room, trade lab, the IQ room is strictly for educational purposes. You just have to recognize that past results, what you might see here today, cannot be indicative of what the future will bring. But like I said earlier, if you work it, it might be able to work it. It will work for you, but only if you work it. You know, you ask yourself, Jimmy, you brought up a great question right from the beginning, quantitative. Well, the world is transforming. Traders are dealing now in a global market. We know that. That's a given. But you see these big institutions, the Goldman Sachs, they're employing very smart guys out of MIT, that are gifted academic statisticians to track patterns or trends in trading behavior and create formulae to predict future market movements. The operative word is predict. What's happening in the world today is the math they're using is working or crunching data that's looking for probabilities rather than historical moving averages of sort, like looking in a rearview mirror, because those are lagging behind the market. Well, the algos that are being used, as they call, the formulae in this paraphrased synopsis of from BBC, they're fed. Let's just call it the math. It's fed into these big machines. Well, you know what? Our boxes and towers are big machines now. Theirs are bigger, and for a good reason. They're doing HFTs, high-frequency trading. But the programs are constantly monitoring market movements and trading patterns that we know about, flags, continuation flags, bullish or bearish, reversal patterns. There's only two types. There's a reversal pattern and there's a continuation pattern. But you see, these programs are measuring it into hundreds of ticks. That's where the high frequency comes from. But these machines are driving everything. So how do we stand a chance? Truly, how do we stand a chance? Well, we do, and I know that there are successful traders that are sitting in the room today. I sure hope so. I know that there's some members here that are doing pretty good. And if you're a member that's struggling, you know how to reach out to any one of us, because coaching is always available to you. So where we come from, Jimmy, is we're quants that have similar type of formulae that's predictive. But it all starts with you having to ask a question before you get into the quant analysis. Question one, what's really going on? And who is in control? And then how can you profit? Before you put a trade on, this is what we're all reaching for. What's going on? What's the setup? Where's the money? Who's in control? Well, we know who's in control. But where are they rotating the money is the question. And then the main question, or what we're supposed to arrive at, is how can I profit? Well, you see, most companies are teaching their students to trade one asset class like the S&P, or they're teaching you to trade the Forex, and there's for good reason. Learn one thing really good and be proficient. We agree with that. But after you learn that one instrument really good, you have to move on, because sometimes that instrument or contract goes static. And you don't know it's going to go static because maybe you don't have predictive technology. And when it goes static, then what? Well, what we do and have tools to do is be able to see where the money is circulating or rotating to. You've heard of sector rotation. It's very similar to that. We call it asset class rotation. We also refer to it as the money trail. So RiosQuant made simple. And this is where you can make it very complex and try to figure out the zeros and the ones in the digital world. Or we can all agree on one thing, that if we can be systematic, meaning process it out, with an implementation of some kind of formal strategies that have clearly defined rules, it's going to help you discipline yourself and almost feel like you're automated. What do I mean by that? If you talk to any professional trader, any one of us, you know that we do the same thing over and over and over again. And as we do the same things over and over and over again, it gets boring, but it's supposed to be boring. It's not supposed to be feeling like you're on a roller coaster ride, even though, believe me, we all know a report comes out, a U.S. jobs report will come out a week from Friday. There'll be huge pent-up tension. Markets are going to tighten up, and then game on. But boy, sometimes that game could be quite exhilarating. So it's not going to be boring for long. But if you're doing the same thing over and over again, but you are getting pretty much the same results, you're making more than 60-65% of winning trades. That's all you need. Anybody tells you that you need or you can do consistently 85, 90, 95%, God bless them. Because I've been there. I've tried it. It's almost impossible. I'm talking ongoing. We will never boast that. But what we will say is this. Our goal as quants is to get into the mid-60s, to the low 70s if we can. But if our money management is right, that is going to be a major game changer for you. Jimmy says, I can deal with boring if it's profitable. You're darn right. And that boring is not kicking your feet up on the desk. It's boring is stress mitigated, less stress. And those three words here, two words, these emotions, indiscipline, greed, and fear, I'm going to talk to you about very briefly. When we wake up every morning, we're facing three distinctively different emotions that are going to come at us or we're going to experience. First, it's greed. We want to know where we're going to go to make money. We're looking for the opportunity, whether we're an E-mini trader, a Forex trader, or a multiple asset class trader. We're rotating our interest or our attention. But we all face the same emotions, greed and fear. Now, it's created by what they would say indiscipline. And then the last, that's not mentioned there, but the last one is this. And I'm going to ask the question, has anybody ended the day by saying, I should have done that? Yes or no? And I'd like you to participate. You basically end the day, or you end a trade and you said, darn, I should have done that. Or, wait a minute, I could have done this. And if I had, look what result I could have had. Anybody experience that? I know you have. It's a rhetorical question because we all have. But you see, that is what we have to avoid. Because if we want to get boring doing the same thing over and over again, gaining a specific proficiency, we're not going to feel remorse. That's the third emotion. So we wake up with greed, and we end up with remorse if we don't get exactly what we expected. Well, maybe our expectations are over the top. And let's talk about the fear for a moment. I'd like to ask anybody a question. Do you know what drives that fear? When you're feeling fear, what do you think is driving it? What's creating it? Santiago says not knowing. That's true. That's almost feeling like you're in the dark. What else? What else do you think creates fear? It's a good question. Fear of failure? Fear of failure? Ego? Don't want the market to beat us? The fear of loss? I can tell you, fear of success. Bruce says they're running out of money. The fear of losing. Okay, well, that's what you don't want to experience, but that's not what drives the fear. The fear, when you're feeling it, is subconsciously you're over-leveraged. You don't have a discipline to the position sizing. And what happens is, if you're over-leveraged or over-positioned according to your own resource of the account, the size of your account, and you don't know you're over-leveraged, then what happens subconsciously is you start jitterbugging with stops. Anybody do that? Moving up and down? Getting a sense of unknowing? Just plain afraid of losing or running out of money? I'm just using everything that everybody has said here. What creates the fear is the lack of a discipline of a money management system, or plain and simple language, position sizing. And if you have a tool that can help you position size and you know it, you'll have confidence in saying, well, the market's moving against me, but I'm not moving my stop because first I know where the stop belongs, and second, if I do get stopped out, the consequence of the loss is not going to be overwhelming to the account or the resource you have, the amount of money. I had a conversation with somebody today. She was fantastic. She was referred to us and very advanced. And we talked about it. And she's been trading a long time, has built her own systems. She and I agree. If you're over-leveraged and you're doing more, not amounts of trade, but you're over-leveraging to the size of your account, subconsciously you're setting yourself up for fear-based behavior. But if you have a step where you can determine what that money management should be before you click, you are going to mitigate that fear. One of the ways to do it is following where the money is going, because it builds confidence in knowing where, you remember the who is in control question, where that money is rotating to. Identifying market rotation and the sentiment immediately at a glance. And uncovering where that steady momentum is. Maybe we'll find it tonight, because we're going to go to my platform. So all three of these elements are equally as important. The trading environment, knowing what the market sentiment is. Finding the market selection, which one has the highest probability. Remember the math and the formula and the prediction? Predictive technology, where that market selection is, and then have a trade signal or a strategy. Maybe it's an auto trading strategy instead of a trade signal that's discretionary, that suits that market environment better. Because you see, we're multiple asset class traders. We could trade corn in one moment and the Aussie yen in another. Because at the end of the day, a chart's a chart. And as long as you recognize what the leverage is, the size of the contracts, what the minimum fluctuations are, and how that is going to affect your account when you're in, is going to allow you to overcome the fear of being a multiple class trader. So the 3 quant steps is simple. Sentiment, we have a tool. It's called the DMS. Who's in control? The tool within the architect frame is NextStream. Who has Ninja here, yes or no? Because that goes into the market analyzer, and we're going to refer to it as the market analyzer from this point forward. And that market analyzer is going to help you recognize where the highest probability of bullish momentum is from bearish momentum so you can go with the flow. If you are somebody that's trying to pick the bottom and catch the turn, I think you're in the wrong meeting. If you're somebody that believes that the odds of being right is knowing when to go with the flow and where to go with the flow, that's what that formulae and predictive quantitative analysis does. And we have it. Not a crystal ball, just tools that have now arrived in this day and age. That the Gnostic, the RQ channel, Einstein auto trading that you see at the bottom of this slide has been around for over 12 years. So what we do is we make sure that we know what the sentiment is. It's called the RQ crossbox. Now I'm going to come to the website, and then we'll come back to the slide. This is the live website. It's called the RQ crossbox. We're going to stay fixed on Forex because when I go onto my platform, which is right here, this is my dashboard, we're going to start looking at different instruments based on what the quant rankings are of these instruments, the Forex instruments. We're going to start looking at the Asian session. Well, first and foremost, we want to know what the market sentiment is. The RQ Crossbox is based on daily data. And the daily data is analyzed. This is where the quant comes in, Jimmy. Quant is nothing more than taking 1, 2, 3, in our case, 1, 2, 3, 4, 5, 6, 7, 8, 9 different technical components, which is based on daily data, have the algorithms assign a valuation of 0 to 2 or 0 to -2 in each one of these categories, and then add them up. Let's take a look at dollar CAD for a moment. 2 plus 2 is 4. Plus 0 is 4. Plus 0 is 4. Plus 0 is 4, and another 0 is 4, and it's 4. That's easy math. 2 plus 2 is 4. But you see, 4 is a bullish quant ranking. If we look at something like the Aussie, -2 plus -2 plus -1 is a -5. That is a bearish ranking, and everything in between, meaning 0 to +3 or 0 to -3 is neutral. And I'll make sure that Einstein is corrected. Thanks, Chris. So, the quant rank tells you what your position sizing should be. We're going back to that one 4-letter word, and it starts with an F, but it doesn't end with a K. It's fear. If you have a tool that immediately tells you your position sizing should be light or aggressive, that's going to help. That helps us. Because immediately you know that you are leveraging properly against the size of your account. If you've got a $5,000 or $10,000 account and you're trading the Russell, you are in the wrong ballpark or arena. There's too much leverage against the size of the account, and this is not standing in judgment of the size of the account. It's really telling you that if you were taught to trade the Russell because it's got great leverage and it's got great volatility, but you're trading with the wrong resource, you are living in the world of fear, whether you know it or not. But let's just get to the reality. If you have something that says, I'm going to cut my leverage in half because the dollar Swiss or the euro dollar or the GBP dollar is neutral, then you know that you are being responsible in terms of the leverage you're using, and that responsibility is going to mitigate the fear. Would everybody agree to that? If you are holding yourself accountable to what leverage you should be truly using, and you agree that you're not going to hit a home run every time, then cutting back your leverage at the right times would probably make sense. Well, that's what this quant ranking does. Yellow is go light. Green is go bullish and go heavy, only if the setup is bullish. Hey, the quant ranking could be bullish, but the setup is bearish. Now, if the quant ranking is bullish and the setup looks bearish, are you going to do a short trade? I don't think so. Why would you? The daily data is saying the formulae, the algos, are telling you it's bullish, and that there's going to be days that the market's going to go counter to the overall quant ranking. Right? It makes sense. Not everything goes in the right direction all the time or follows the big trend. There are counter trend moves. Well, it's your choice whether you want to go counter trend. But I can tell you, if you're trading counter trend, meaning dollar CAD is a quantitative bullish and you're trying to short the dollar CAD, that's not where the odds are. And the one thing that we boast, and we can boast, is we're an odds-driven system. We want everything to line up. We want the quant ranking to be bullish or neutral, but particularly look at the bullish quant rankings first or the bearish quant rankings first. We hope that we can find a bullish setup in dollar CAD or a bearish setup in Aussie US dollar. Well, there were plenty short Aussie opportunities today. Who traded the Aussie today? You Forex guys out there. Who traded Forex? You give me an idea? Because there was opportunity in Aussie. Barry, you traded Forex today. Did you trade anything Aussie? Any Aussie pair? GBP Aussie? Aussie yen? Aussie dollar? Aussie anything? Aussie US dollar. Good. Did you make money? You sure could. You sure should have. That means you're going with the flow, Barry. And Santiago, the same. We'll show you in a moment. So the RQ Crossbox does daily data on 9 different components that give you a quant ranking that defines your position sizing for you and gives you an overall market sentiment. And you don't really want to go against market sentiment if you don't want to. Now, if things are neutral, then you'd have to decide. If there's a setup, fine, but the leverage has to be reduced. So what we do is we look at bullish and bearish opportunities. Upside, look at these. This is our upside list going into the day. The Dow Jones, and this is not predicting the Dow Jones is going up. It's just the algos are saying there's a higher probability of upside movement. Dow Jones, NASDAQ, natural gas, Euro US dollar, Russell, and soy. Well, we're going to look at Euro US dollar. Euro US dollar was neutral. A 3 would be a strong neutral. Natural gas is bullish. And soybeans. Well, maybe you don't trade those, so you don't trade them. But remember, we're multiple asset traders. That doesn't mean that we're trading 6 instruments. It just means that these are the 6 instruments you want to look at for long opportunities. It's the upside list. The downside list, there was only one. And Barry, you hit it. You didn't need this. Nobody needed this to recognize it if you like going with momentum and flow. But the most advanced traders will use these tools to one degree or another. So Aussie dollar set my day. When I opened up the screen early, I was up at 5 o'clock, 5:30. I do coaching sessions early. I was up. I saw some opportunities, and I'm going to show you those opportunities in just a moment. So, it starts with sentiment. The sentiment tells you what position sizing you should be using. Good enough? Makes sense? hold on just a minute. I think I've got something that just kind of went awry on me. Hold on just a moment. Uh-oh. Hold on. Let's do that again. Nope, don't want to do that. Okay, there we go. All right, so first things first, sentiment in the RQ crossbox, position sizing. This is the pie and a snapshot of one of the days. Potential outcomes, price continuation, meaning trend is already evolved. Risk of volatility, maybe there's an event that's about ready to be announced. Reversals, a change in sentiment. Are you prepared? And I don't mean catching a low, because all you're doing in catching a low or catching a high is looking for a bounce. That is not where the odds are. The odds are when the real sentiment reverses. So, whether this is what we have to recognize. Are we in synchronization with risk-on or risk-off behavior that's identified with the S&P 500 and the Treasury notes? They're moving in correlation, risk-on or risk-off. Risk-on's buying of equities, selling of Treasuries. Risk-off is just the reverse. If there is a mixed trading environment, meaning static price movement in either the notes or the S&P, it's very likely that there's going to be very mixed currency trading or conflict when both the bonds and the S&P are going in the same direction. So what happens is you've got to know what the market environment is intraday, whether it's in synchronization, mixed, or conflict. If you want to learn this, if you're not a member or in trial, take the trial. You will learn this for free. And the attention we pay to our trial members is unprecedented. So the potential outcomes are either in intraday trends, of course, as day traders, that's what we're looking for, choppy, meaning range-bound, or reversals. And here's the sequence. Very simple, the opening sequence. What's the trading environment? That'll tell us how currencies, risk assets are doing, like copper, oil, gold. Looking for the market selection, step 2. That's with the next stream. We've already looked at trading environment. Next stream you're going to see in a minute. And then which indicator or strategy you're going to use, whether it's a trend or momentum trading. Because if you're just using one signal, that's not going to be able to identify the 3 different elements, intraday trend, choppy, or reversals, you're in trouble. Because quants have different indicators for different market conditions and potential outcomes. I guess income would be an operative word too. Any questions? I can kind of pull back for a moment, field any questions that you have, and I'll be more than happy to answer them. No questions? Okay. I'm going to move on. So there's a sequence. When our members become proficient, this sequence will take less than a minute to end up with a signal, a setup. Profitable, can't guarantee, but high probability, yes. Will you get stopped out? Certainly, there'll be times you get stopped out. But you will find that the odds are greater if you have something that is predictive. And that's what these 2 signals and auto trading will do. So this is what it looks like in the metrics. Step 1, step 2, and step 3. Now, let's do this. Here's what our market environment looks like with our RQ tech. It shows where the money trail is going. The 1 hour, 3, and the 8 hour is dynamically built out of 24 individual 30-minute time compartments. These are segments. I should say these are the compartments, and there's 24 segments of 30-minute data points. And I'll show that to you live. And those data point, time is rolling from one data point to the next, one 30-minute data point to the next, and it's not like it's on a stop clock where it stops and then goes. It's streaming through each one of the 24 30-minute data points and then measuring price velocity, which is going to end up showing you where the money is trailing to. In this picture, you can see there was selling momentum in the notes and the bonds and buying momentum in the equities. That's referred to as risk on. And you had some currencies, at least half of them were showing pretty strong bullish momentum risk on. Market environment that's risk off is just the opposite. Look at bonds and notes bullish with the equities bearish. That's when you look to currencies going short. Well, that was earlier this morning with the Aussie, which we're going to see. Conflict is when prices are somewhat moving in unison. Now, the momentum shows up as bearish, but our tool that states conflict, look at this currency. Is that not the picture, and the copper and oil for that matter? For most part, is that not a picture of confusion? Yes or no? Right here in currencies. There's nothing that's lined up that's all bullish or bearish except for dollar CAD. That is a sign of conflict. As it relates, it is relating in correlation to the bonds and the stock indices. Mixed is when the markets, those things go static, like this. Look at how static the momentum is. Not really bullish or bearish anywhere. That's when we look to the independents. Well, today we're going to focus on currencies. These are what our signals look like. Gnostic is a trend trade where we're looking for a 5. This is step 3, looking for the setup with the right signal. This is called a Gnostic trend trade. We're looking for 5s. 5 is the highest quality. You know, we had the daily ranking. This is the intraday rating of that 5-minute bar. That's a 5-minute chart. So we have 5, 3, and 1. We look for 5s in a reversal or a early formation of a trend. So we're looking for 5s. That's the highest quality momentum. Or we're looking for a breakout. See that cayenne blue line? That's a breakout signal. It's called the RQ channel. So one signal is the Gnostic, as you saw earlier. The other is the RQ channel momentum trade. The third is the auto trading strategy, and this is where now people are using, and it's becoming popular, very popular, if they can find the right auto trading strategy. Because we know this is an information age society. Things are moving rapidly. We're not going to be able to manage a portfolio like these guys on the desks at Goldman. But if we could show you where and when it's most conducive for an auto trading strategy, we know that's going to be helpful. And we're teaching our people now more than ever. The demand from our growing communities, that's in the hundreds now, we've only been around for a couple, 3 years, is starting to look at Einstein more closely to just add on to their overall trading arsenal with Gnostic and the RQ channel. Because it is designed, auto trading is designed to mitigate fear. As long as you know where to use it, how to use it. Remember what I said, it only works if you work it? Well, Einstein auto trading is no different than being discretionary trading with the Gnostic or the RQ channel indicators. So we feel that this Einstein is now designed for the quant-based trader. Us quants are starting to use this. We're not having anybody run it for us. And we can turn it on and turn it off anytime we want because it's not a black box. We refer to it as a gray box. In the trend and early formation, we have what's called the accelerators. We're looking for fives. This is on the discretionary side. 5 is the highest quality of price action. Just like the quant rankings in the RQ Crossbox, well, this is a rating system intraday on a 1-minute chart all the way up to, you name it, 480-minute charts, 960-minute charts, or 2-minute charts. The 3, if seen, is a signal that it may be overbought or oversold. The exhaustion, or the 1, is a sign of the market has run its course. It got extremely oversold or overbought, and then the 1 shows up and saying, done. The who's in control is starting to get out. That's what it looks like. Here's a 5, early formation of trend change, more confirmation. This is called aggressive accumulation, and we get a bundling of 5. Sometimes there's 3, 4, 5 of them that are tightly knit, and away we go. And there's another 5, and finally making it to its critical resistance. Now take a look at that 3 and that 1. These are 2 different algorithms. The accelerators are different algorithms than the algorithms creating these levels. And now it's time to come on to my platform. This is my dashboard. And here's my ES, which represents the benchmark stocks. Here are my notes. Here's the risk on instrument. This is the risk off instrument. Price action right now is showing that the equity market is a bit weak even in this evening session. And take a look at what's going on with currencies. We're starting to see weakening of the GBP, of the euro, of the Canadian, of the Aussie, of the New Zealand. What's happening is currencies are starting to weaken because the S&P can't get out of its own way. It's not showing signs of upside momentum yet. And now we're going to define that real quick. You see, the upper green line is called the bullish level. This is our indicator is called the NOS levels. It's Gnostic. It's one of the 3 indicators or strategies, but this is an indicator that pretty much starts at midnight the night before and goes all the way to 12 o'clock tonight. All price action above the upper green line is called the bullish NOS level and the bullish region. So all price action above the upper green line is the buy side only of the chart. That's objective. If you see price action above the upper green line, you're only a buyer. Just in reverse, price action below the lower green line is the bullish region of the chart, and that is the sell side only of the chart. Very objective, very simple, not having to worry about what all of this is about. And the green halos, the red halos, the arrows, the trying to catch the tops, not understanding. But look at this. Take a look at what this chart, the meaning of this chart has by simply putting on, and those are not pivots, by the way, simply putting on those levels. It takes on a completely different meaning. It simply is a trading field, almost like a football field. At midnight, these levels change. They widen. They're totally independent. Let's just call this the trading field, the south goal and the north goal. Final target, or final resistance and target too. Final target support. Every day we get a chance, if this is the buy side only of the chart, and we get up early, right, we get a chance to join who's in control. We know who's in control. And we look for these little bundlings of 5s. Remember I mentioned the 5s? hello, drops right to our target. Now think about this low for a moment. It goes straight down. We have the market open. It goes straight down and stops right here at resistance. This is called resistance 1B, by the way. The first yellow line's 1A. This is 1B. And stops on a dime exactly to the penny, to the point, and then takes off. Now somebody would say, well, if you believe in that, why don't you buy it? Yeah, we could, but that's not where the odds are. The odds of continuation, remember, is here. It's closing on the buy side of the chart. So the upper green line basically is identifying the bullish momentum region of the chart. And the lower green line is identifying the bearish region of the chart. And we're only, if we believe in going with the flow, like, who said it? Was it Ruben? Who went short the Aussie today? Who was that person? Barry. Well, it's not the Aussie dollar, but I'm going to show you that. But first it has to be understood what you're looking at. This is the buy side region only. Sell side region only, right here. Can't buy on the sell side, because then you're going against the odds. So if everybody understands that these levels change at midnight, they're predictive, they're formulae that's saying the outer bounds of critical resistance is here, and that would be the target. We're trying to buy at the very upper region, or sell at the very upper region of the bearish side of the chart, right? It would stand to reason that would be where the lowest risk is. So with that said, now let's take a look at what's called the RQ channel indicator. The RQ channel indicator is if, let's say, you miss these fives right here, and you're not looking, you're looking at different instruments to where the momentum is. This is in the morning. You can put on Einstein, the auto trading system. You haven't picked it up, but Einstein is a breakout, 70% of it is a breakout indicator that's going to identify the optimal point. Take a look at where this GBP picked up the Aussie. Remember, Aussie's weak against the dollar. It was weak against everything. Well, I looked at the Aussie, and there was the setup there. Aussie, GBP Aussie, bullish. Strength of the GBP over the Aussie. Or bottom line, Aussie was weak against everything today, pretty much. So I couldn't follow everything because I was in another trade. This is my trade. I was shorting the Aussie, Barry, right here. I'd gotten up early. At about 5:30, I saw the price action drop below resistance, support 1B, into the lower zone, pointing at the south end zone. And I said, okay, I'm going to do an RQ channel trade, a breakout trade, right here where it breaks the magenta or the bearish channel line. That's what it's called, bearish channel line. And I'm going to go short myself. This was a discretionary trade. I didn't want to trade both instruments at the same time. I wanted to mitigate that unknown, that fear. So I put Einstein on because I've learned which one of the instruments shows the right setup. Well, I saw a range-bound trade. The market came down, held what was resistance 1B, became support, saw a bunch of fives showing up as a reversal, but I missed that, or actually an early formation of the continuation of the trend. I missed it. So I put on Einstein and just stopped thinking about it. That's basically what happened, because I was involved here. This was at 9 o'clock. I was still in this trade. You can see it. I did not want to manage this. I let Einstein manage it with a risk of $200, $300, and I decided to just move on. And I ended up getting, at this point, 11 pips here and did get the 20 pips on the Einstein trade. This is auto trading with a gray box, taking away the decision-making process. The only decision you have to make is understanding where to turn it on. And we teach you. Graham, Chris, Santiago, all of you. Now, you may have it, you may not, but if you have it and you're not using it or you're not being trained, it's available. The coaching is there, and you know you have it available to you. So I had one Einstein trade and one GBP. Now, I'm going to take myself and go to the different workspace, and I'm going to go to my dashboard, and we're going to start looking for trades. And see if there's any kind of a setup. Wait a minute. Hold on. Okay. No, well, all right. Well, we'll do it this way. No, you know what? Let's go to the other one. Just a minute. Okay. Here's the other, because there were a couple trades. Here's Aussie dollar on Einstein. Now, I did not take this myself. When I got up, I put Einstein on early, and here it is, the result. The setting was put on at 5 a.m. to 9. I closed Einstein down at 9 a.m., meaning no new trades beyond 9 o'clock. 9:01, If I'm in, fine. But there won't be a new trade put on. So when I got up early, I put on Einstein, and it caught two trades. Take a look at where it got out at support 2, final support, target 2, and look where auto trading came out. And I might add, look at where the 3s and the 1s start appearing, right before the open. Now that's somewhat coincidental. Einstein doesn't know when the open is, but Einstein knows where price is and what the goal is. It was a $200 risk versus a $200 reward. And look what happens. As it's coming out on a 3, oversold, and then the 1 follows extreme, no more Einstein. I actually had this set at 11 a.m. and I changed it to 9 a.m. here. And I said, you know, we're already heading towards critical support and final target. Why do I have to press my bet? And I got out. Or I mean, I closed it. Einstein came out. I closed Einstein and there were no other trades. Now what we're going to do is we're going to close Einstein because we know Aussie is having some tough times. It's already broken down. Here, it's worked lower. It's gained about 8 pips. This was a trade tonight, right here, at 8:30. There's a 5. It breaks the RQ channel. It's all good. Take a look at this. Here's the GBP Aussie. It's a different trade altogether that I had that was put on. I set it at 5, but it ultimately got filled at 9, and it came out right after the open of the market. The yellow vertical is the open. This was risk. This was a cross pair that was risk aversion. The Aussie was weak against the dollar here, as we know. That's that target that I showed you earlier that came out early. These are 2 Einstein trades that if simply And I think one of the better settings is 5 a.m. to 9. Close it down at 9. Why? Because now if you catch a trade, you don't have to worry about the open of the stock market, where things start changing rapidly, as we know. Well, we teach all of that to you. If you're not a member, you want to do a trial, there's so much time you get in a trial that you will understand logic of what this is about. And members, this is not anything more than something to help you mitigate fear, stress, not feel like you got to manage every single trade yourself. Now take a look. Aussie starting to reverse, and actually not reverse, it's starting to gather some more momentum. Take a look here at the RQ Tech, which is going to show us momentum. So this is now an environment. Here's the stock market. All right, nope, sorry about that. That doesn't belong there. Here's the equities. That was in the morning. Look at notes and equities were going up. There was a correlation of the Aussie weakening against the Aussie is a risk currency, and it was getting slammed by everything. When the notes were rising, Aussie was weakening. The stock market at that point, take a look, was weak. Notes were rising. That's risk off. That's getting out of Aussie. That's selling Aussie. There's a statement. And I'm going to read it. Steve, you may answer at the end. I have a major concern about a completely new system. Learning a whole new set of terms, charts, etc., as I've always been in equities and options, plus I'm too damn old and weak. I'm 63. 60 is fighting a physical challenge. Sounds extremely interesting, but concerned about the learning curve and time. Jimmy, I understand exactly how you feel, but there's already a couple new people that just joined after the 2-week trial and the literally hundreds of hours of training inside a 30-day period, like 125 hours of training inside of 30 days, all for the purpose. Graham is 61. He just joined us. The curve, let me ask you this, Jimmy, and I'm going to move on. Do you feel you have a strong skill set on support and resistance? That's all I need to know. Yes or no? Do you feel you have a strong skill set on support and resistance? You say yes. I assure you this will come to you. I'm not going to sell this to you because it sells itself. Because all we're talking about, all we're talking about is support and resistance. If we break to the upside, and these were called resistance levels here, right? These double yellow lines on the buy side of the chart, right? Here, why don't we do this? I wasn't planning on doing it, but I'm going to. Let's go back to my other workspace. Let's go back to this chart for just a minute. If we break this green level and we say that this is the bearish level, and it's the sell side of the chart only, and we break this and go bearish, is that not going to, this was support, but then it breaks the support and breaks down, is that not going to be resistance, Jimmy? Of course. Look what happens. Price breaks into the bearish side of the chart, tries to make it back in the bullish zone, only to get repelled, go down to the support levels, and then they fight it out. And then ultimately, the bulls went over for a while, and that became resistance that finally gave way, and it defines the buy side of the chart. So that resistance was broken right here. And look at all the 5s that show up. This is where those algorithms show up, where you're just looking for 5s in the right place, just the early part of the new zone. Is it becoming more clear? And instead of these resistance levels going short against it, because we're buying down here, we're using this as a target. We're not using it to catch a turn. This is nothing but support and resistance. And if you get a closer look, I promise you it will become far more clear, if that's good language. I don't think that's good grammar. It will become clear to you. The vernacular and the terms will be it will be no problem. Support and resistance. Price action broke support 1B. Now it's going to be resistance until it breaks back above. It goes back up against what was support is now resistance. We know what that is. More resistance on Aussie dollar, more resistance. Remember, these levels were created 14 and a half hours in advance. More resistance, breakdown. Now let's look for something. How about we looked at the Aussie dollar. That's already broken down. Let's take a look at New Zealand dollar and see what that looks like. One second. Oh, yeah. I went short New Zealand dollar. Here it is. I took the RQ channel trade right here. Right here. This is a discretionary trade. I just did 10,000 for the demonstration. I'd be up $80 on a standard contract. Usually, if I'm doing zone 2 underneath resistance 1B, right here, this is the, remember, sell side of the chart. Let's just make that clear. Sell side only. Zone 2, I saw an RQ channel opportunity right here. It's worked lower. Why did I do this? Because I saw the money trail right here. This is one of the weakest currencies on the board. I can sort it weak to strong or strong to weak. And when I was getting set up for the day, the night, I was looking at New Zealand dollar just very weak. So while it's $9, it's 9 pips. I don't like looking at dollars, so I'm just going to do it that way. And I've now made a low, and I could be probably taking my money. This is the evening hours. 9 pips is not bad, regardless. This is actually, okay. And I think I'm going to close it. I see the market bouncing. Maybe we'll hold it a little bit while, but I'm taking a total of 21 pip risk, and right now I'm up 8. Nothing's exact, and I can't guarantee myself I'm going to hit resistance. It is fading a little bit. I'm starting to see yellow ones, which are showing me a little bit of exhaustion, but there's really not a lot of 3s. There's still 5s in here. What we do is simple. We recognize the market sentiment, go to crossbox, know what the position sizing is. Step 2, where's the money trailing? It's bearish. New Zealand dollar. That's why I picked it. It was one of the weaker positions. I looked to see if there was a setup. There was. Price action was going sideways and looked like it was going to break down. I put in a resting order. This was a pending order, guys, that I just sat there with. And it got filled. I didn't even know it got filled until I looked at it again. I didn't know which was which. I just didn't remember because we're doing a presentation here. I'm going to take my money. I'm just closing it. That's cool with me. Now I can buy the bid. I'll probably try that for a minute. I took it, and they gave